The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow down 2, NASDAQ, S&Ps are flat. Gold is going to the moon, folks, okay? Dollar's going to hell in a handbag. It's going to be really wild watching this whole baby shake out. Gold will be down 12. You're up 8. Dollar tested the high of last week. Had lighter juice this morning at about 0730. Giving it up. S&Ps are going to give it up. If you haven't traded the Nadex platform yet, get over to our website, folks, at TFNN. As you're at TFNN, you can see the banner on the top, on the side. You can hit that banner, bring the platform up. They'll put $25,000 of paper money into your account. You can start trading it right here, right now. Bottom line, Darrell has an outstanding show every trading day, 1 to 2 Eastern Standard Time at TFNN. You can get all that programming right on your cell phone, tfnn.mobi. He'll walk you through how you should be trading this exchange on a continual basis. Darrell Martin, what's going on?
Man, it's all flying right now, isn't it?
It's a beautiful thing, man. This morning, you know, if you're in front of a computer, folks, okay, I'm looking at the gold this morning and the dollar, right, and I'm saying to myself, oh, thank you, God, this is about as good as you get. And specifically what I was talking about, folks, is this. I was coming more off the dollar than gold, okay? The gold price was down. That was at producer prices. I like that deal. But what you had with the dollar is that right now we get 25,000 contracts. At 0730, we had 17,000 contracts. It was testing the highs, and it's like no juice whatsoever. I said, I think this is it, man. And if you get my daily newsletter, you know that's exactly what I said. I says, this is the test, and I think this is all she wrote. And in that context, if that's what it is, what we're going to see on the daily, on the weekly, coming into this close, you get the S&Ps up a couple. I suspect we're going to have a flat market coming into this close. And if that's what we get, that's a change of dynamic in a big way. So it's going to be interesting watching this whole baby shake out. The gold contract, no doubt, got the action going. What we had out here is that gold was down $12, folks. We were down at 1146, and bottom line is up $23 from that level. And you get juice behind the move, you know. So it'd have to build some cause now to get up and over this 1170 area. We hit 1172, but bottom line is that you've had the test, you've had the retest. The dollar has had the test, has the retest. It missed the price point that this dollar has been trying to go after is the 88.88 on a continuous contract. I think we got 88.30. Yeah, 0.36. I think that's it, man. So it's going to be wild watching this whole baby shake out, no doubt, man.
See, that's all she wrote right there, huh?
That's what it looks to me. And if that's what it is, you're going to see big changes of trend, you know. And I suspect that the best places to go probably, in fact, the oil market, that was an ABC down, but if in fact this is what we're going to...
It popped up this morning, man. It was a beautiful ride, 74.50 all the way up to 75.40 exactly. Right now, yeah.
Yeah, and it's real possible that that's it. You know, we went to 73.25. So you got 120,000 contract. No, I need the F contract. Okay, CLF4. So if we look,
we're getting a lot of volume too. I'm seeing coming in on the indices as well.
Oh yeah,
still strong volume coming in, pushing them up.
Oh, there she is. Okay, so we get over to crude. Yeah, this would work. See, you got to a lower low at lighter volume out here. This would work. So this might be a turnaround everywhere. So this is interesting. So thus far, folks, all you've had, and this is hard to do, all you've had in the crude contract is 44,000 contracts. You know, we went lower yesterday with 190,000. That's what it needs. You need a lower low. You get back inside the range. You're at 75.23 right now. 75.95 gets you back inside the range. So this is going to be wild watching this whole baby shake out, no doubt. So, hey, how you been, man?
I've been doing good. So just been trying to keep up with these markets and these, 20-minute binaries we talked about on Wednesday.
Yes.
They've been flying around now, which is awesome. A lot of opportunities right there. And just going in for quick moves, fast moves. You can do low risk. You can do, premium collection that decays incredibly fast. So there's a lot of cool.
Oh, I bet. So let's go through. Let's go through some of those, because those no doubt are intriguing, especially in this market. Because what you have had, folks, in this market is that you haven't had a lot of movement, basically, in the S&P. The S&P the last few days have been trading in the same range. The top of that range is about 1142. The bottom of that range is about 2042 to 2030. And that doesn't seem like a lot, but that's a lot when you're dealing with basically contracts that are expiring every 20 minutes. So walk us through of how these work, Darrell.
All right. Well, on the scanner over here, if we go in and we go to the binary scanner, okay, to make it easy.
Yeah, beautiful.
And then hop on down and then just choose contracts to expire here in less than 30 minutes. Makes it really easy, right? Because we want the 20-minute contracts.
Nice. Okay.
And that'll even give you the intradays that expire. Let's say a contract could expire at 10 o'clock or 11 o'clock, right? Yeah. It'll still give you, or even at 3 o'clock, it'll give you every contract that expires in less than 30 minutes.
Nice. Okay.
So it's not like you have to go and change it and everything. Even the weeklies that expire at 3 o'clock will show up when there's only 30 minutes left. So it'll put all those contracts together for you.
Yes.
And, now you got like intradays, dailies, weeklies, and 20-minute binaries all coming together.
Right.
So at 3 o'clock, you have literally 4 different groups of binary contracts, like 50 contracts expiring at the exact same time on one instrument.
Yes.
So it's really nice to have the scanner to be able to, it combines them all and just puts them in strike order. So you can find that best contract. Basically, what happens on these contracts is you can go down. Also, I select all the indices at once.
Okay.
Right there. Makes it really, simple.
Yeah.
Okay. So, and they're on the 4 U.S. indices. They start up at 9:40. They go to 4 p.m. Eastern time. Okay. So the first contract starts straight at 9:40. The first expiration is at 10 a.m. And then the last expiration is at 4 o'clock Eastern time. Right. On the 20-minute contracts.
So right now, I got mine up. So we're dealing right now, folks. It's 10:14. And the next ones that expire at 10:20. Okay, cool.
Exactly. And notice they're really tight. They're like a point wide.
Yeah.
So meaning like it's like 2036, 2037, 2038.
Right.
Over on the S&P.
And we're at 2039 right now. Okay, cool. Go ahead.
And what they've done, I'm really impressed by how they laid these out. They actually get narrower during lunch.
Okay.
So they'll go down to like 0.7.
Yeah.
During lunch. So they've accounted for the volatility by the expiration hour.
Yeah.
The first time Nadex has done that, where on a same type of contract, they actually change the width in the strikes.
Okay.
So that way, the idea is that proposal I gave them a while back, they've been implementing it. I went and I basically said, if you'll change your strikes to this, then on an average day, over 80% of the time, on nearly every hour, you'll cross 3 strikes an hour, and there'll actually be premium in those strikes.
Yes.
Okay. And so they went through and they actually revamped half the contracts based on that on the intradays.
Nice.
And I guess they took that same concept and applied it to the intra-hours, which is really cool. So anyways, but that means you could buy an out-of-the-money contract for $15, a 1-point move, right?
Yes.
So let's see, we got the S&P sitting at, 38.5 right now. So, yeah, for $10, less than a 2-point move, if you think the S&P is going up, you got that right there. If you think it's going down, you could risk less than $20. So on a short side, wow, 2037.8. That is actually really close. Did you see that they just go from did you just see they go from $80? It's down to $60 right now. Did you see that?
Yeah, I did. I'm looking at it. Right.
Yeah. While I'm talking, this thing just made $20.
Right.
Make that almost $30 now. Okay.
Yeah.
So when I say they move fast, they move fast.
Man, this is a trip. Okay.
Okay. So this is why I like them so much.
Right.
So you can go in there and it's boom, dropped down, went from 80 to that, and then that $4 one, it also dropped. It dropped from 10 to 4. Okay, so that flip side goes on maybe doing premium collection on trades.
Well, the one when we just started, so the 2036 just went from $4 to 34. Selling it. Of course, I'm only going to sell it.
Right, exactly.
4 to 34.
So they changed so fast. Yeah, we were on the 2037. That one was I was given a sell quote at 80. I still have it highlighted on my screen, and now the buy's back down to 23.
Yeah.
I mean, that's like $60 in less than a couple minutes.
No, I know, man.
So, and about half that happened in 10 seconds before I even finished my sentence.
Right.
So, now it's down at 13, 10, 12. I mean, so they're very, very volatile. Like, I got a short over on Russell, just while we've been talking right here. And if you don't check out Russell, I was looking at 1174. I mean, which is down at 51 now, but was at about $95 when we started talking.
Yes.
So, and look at this. I mean, right there. Just entry short 1177, go for 1174. Boom. Just target that strike. Took less than 10 minutes. Just flying down.
I know. I get you. This is killing me.
So now you see why I'm getting all giddy about it, right?
No, I can see. And you got to be really quick, folks, because I got one in here, but guess what? It didn't get executed. They're going that quick, so it's in working. But I got it. Okay, so
But yeah, I mean, basically, you got to sit back. You have to have your plan. You have to be willing.
Yeah, you got to get a bunch of them in. I got it. Okay.
Yeah, and you got to be willing to trade fast. Right. But I mean, it's one of those things. Like if you buy when a certain level's hit or sell when a certain level's hit. You do that all the time.
No, for sure.
And so, I was looking to sell when it hit 1177. Okay, what am I going to sell? Well, I'm targeting 1174, so I'll sell 1174. I'll buy back. I usually do the whole 43-57 rule, which is there's some bid-ask spread in there, which can vary from $5 to $10 or $12, depending upon implied volatility that day. And so basically, I want to make sure I can get out of the trade. Whenever it hits my strike. And I want to give myself a couple ticks of wiggle room.
Yeah.
One of the things I've been taught is if you try to squeeze every tick out of the market, it'll squeeze every tick out of you.
Oh, there's no doubt.
And so, one of the things I've learned, it's already hit 1174. But if I'm targeting 1174, I mean, it's okay to, 1174.5, 0.3. It's okay to take profit right there, right? So many people want that very last tick that it just eats them alive. And so that's why I'll buy it back at 57. So if it gets to 1174.3 or 2 or whatever, it's going to take my profit off. Yeah, I gave up a few bucks, but other favorite saying I've been taught is I'd always wish I have something I don't. I'd always rather wish I have something I don't as have something I wish I didn't.
Okay, I'm going to wait for the next 20-minute one.
Yeah, you're ready to go now, aren't you?
Oh, this is sad. This is sad. I'm in trouble now, man.
Then we're going to Vegas next week after this, right?
We are. Well, I'm going to see you in Vegas, I know. The money show's in Vegas next weekend, folks, if you're going to be around. We're going to be there. I'm not going to have a booth, but I'm going to be there Friday and Saturday, I think. I'm coming home Saturday, Thursday and Friday.
Yeah, I'll be up there most of the week, yeah.
Yeah. So this is going to be wild watching this shake out. And, folks, the way you can test drive it, come over to our website at TFNN. You'll see the banner on the top, on the side. You can hit the banner, bring the exchange up. Man, for what I do, man, this is like heaven, man, because it's...
because we're busy all day. We only have little spots where we can trade.
Well, it's always the swing points. The swing points are it. I mean, that's the only reason I'm waiting here is that this S&P is coming into the swing point at 0400 this morning. It means it's going to go a little higher before going lower. You stay right there, folks. Darrell and I are coming right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. We are talking, right now we're talking the S&Ps on the 20-minute contracts out here, folks. And this is pretty dynamic. You know what's amazing about this, Darrell, is that, you know, I've always traded the spreads. I mean, I like the spreads. You know, it's a different ballgame. But it seems that in this context, you're talking about, you can, like on the last 20 minutes, well, in the last 20 minutes, when we were doing that, there was only, what, about 7 minutes left when we started it, right?
Yeah.
But you could go from 4 to 30 in a second, and you're only talking about, I was 2 points out at that point. You know what I mean? Which, for an S&P, that's nothing, man. So this is really...
If you're at a swing point, you know, then, I mean, that's a place where you can easily play these. You can even straddle them and go both ways. So...
Yeah, right. Oh man, that's
if they're under $20, okay, like combined,
right?
And let's say you're getting at that 43.57 rule I always talk about.
Yeah.
Then I mean you're making a 1-to-1 on like a 1 or 2 point move.
Right.
100% return if it moves either direction in a couple, 1 or 2 points.
And which most of the time they do anyway. That's what it comes down to.
So it's got to happen within like that 10 or 5, 10, 15, 20 minutes. That's the only thing, but. If you're at a swing point where it's going to oscillate, I mean, that can actually be a great point to start playing with them. So 2038 is a pretty strong level as well that we're at right now. It's just been popping up and down on that for the last 30 minutes.
No, it is. There's no doubt. And so watch. We bring this ESZ forward, and this is a trip, man. Okay, this blows my mind actually. This is gonna be a little trouble for me, I think. Oh boy, how am I ever gonna get any work done? Okay, so we take a look at this. Yeah, it's hanging at the same place right now. So right now you're at 2037. The spike is there at 39. Yeah, you got to wait for the next move. That's what's happening. So what you have here, folks, this is intriguing, right? It's like, okay, why?
See, you're not going to get a big move right now.
No, you're not.
Wait on the, but you don't need a big move.
No, you don't. You don't. But what you can do is say, hey, guess what? Another 20 minutes is going to come up. So I would just wait to see. Okay, how does it test you the 2039.75, right? Or you go to the other side. How's it going to test the 2033.25? I mean, it's that simple, really. You know what I mean?
Well, as you get closer and closer, this thing can get really dirt cheap. Like right now,
exactly. That's what's so cool. I know. Yeah. That's my point, because that's what happened in that last correlation when it was at that when it was trying to test the 2038 mark. You know what I mean?
Exactly.
That is crazy. That is absolutely amazing, man. Now, market-wise out here, folks, okay, what you're going to have, my larger take on the day, what you're going to have here, the dollar's failed. And this is going to be a big failure, not a small one. Now, the correlation and the confirmation would be that at the end of the close out here today, you're going to see that cash S&P just lower, flat to lower, because that'll be a failure on the daily and the weekly. Here goes the S&P right now. Let's go to, we got Mike in Dallas. Hey, Mike, what's going on?
How you doing today? I just needed to ask Darrell a quick question.
There it goes. Bye-bye. Go ahead.
Darrell, do you use the stop trigger for the 20 minutes?
They're so fast, honestly, I don't. I just go in, I grab them, and get in and get out.
Okay.
So they're too quick. If you wait, I mean, you can use it, but, I mean, if you're waiting on an indicative price to move, like, and stop out of a trade, I mean, it's one of those things, like, you need to be very comfortable with the risk. I mean, if you're doing in the monies, you can, but, I mean, get ready to trade fast. And, I mean, that thing can go from, like, 80 to 20 in the blink of an eye. Right?
Yeah, and it will. So, they all will. That's right. I mean, that's how they work, right? But that's what makes them so intriguing.
I'm more likely to hedge off with them. So if I go in and let's say I'm doing an in the money at 80, I may look and see, or 70 or something like that. I may look and see if there's like a $5 or $10 cheap binary.
Yeah.
And as it starts popping up in my favor, get some really cheap, stupid contract. I go in, I end up taking my profit on my long, hopefully. Like if I'm not buying it in the money. And then if that thing turns around, I actually can still make a killing on the other side. So just on the oscillation. Because, I mean, you can get that small oscillation in that short period of time.
Yeah, that's pretty intense.
Do you have a problem? Do you ever have a problem getting out?
As far as liquidity, no. As far as price moving fast, that can be an issue.
Okay, so liquidity's okay?
I mean, because if you're using a limit order, it can fly past a limit order. I mean, a limit means this price or better. So if you say, the lowest I'm willing to sell out of a trade is 50, and or the highest, I mean, I guess the lowest is 50, right? And but it goes down to 30, then if you have an order sitting there at 50, because you didn't say you'd take lower than 50.
Okay. Well, thank you very much.
Thanks, Mike.
Yeah, you bet.
You stay right there, folks. Dell and I come right back. Dow's down 13, Nasdaq's off 8, S&P's a flat. Gold's up 690, King Dollar up 228.6 after be up over 500. And yes, the IBB is getting destroyed, folks. Gonna be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member, FDIC, and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow down 16, Nasdaq's off 10, S&P's flat, and we're talking the Nadex platform. You know what's interesting here, Darrell, is that there's no doubt these 20-minute binaries, they really have it going now, man. This is a different flavor altogether, man.
Yeah, it is.
Yeah.
It actually already accounts for more than 14% of their volume. They just launched like a week ago.
Well, what happens, folks, it totally makes sense, because what happens is this. You've heard the announcements, but you really truly can trade with $100 or $200, because we're talking here just on these last two ones. Each one of them, well, the first one was $4. This one here, well, just check this out. This just went from $13 to $77 right on the break. And all I was 2 points out of the money. That was it. It was a 2034.25, and that's it. $75 on the other side. And you don't have to wait. That's the bottom line, folks. The bid is out here at 75. So that is pretty amazing. Well, that's unbelievable for only 2 points.
Right, exactly. It's like people get in stocks and they're waiting for ever for them to move.
It's
right?
at 87 now. I mean, I'm already gone. I'm gone at 75, but it's at 87. Yeah. That's crazy, man.
Makes you just want to sit there and watch them and play them all day.
Well, I'm gonna. Yeah.
The other thing is, even if you don't have a lot of time, I mean, you can do this during lunch.
But I haven't seen a risk versus a reward ratio like this since I've been in the business. Well, the only time I actually did, what happened, folks, in the early 90s, when the option market first started, you could do 10 contracts at a time, and people didn't know about it for a couple of years. And we were printing money then, but that's the last time. You're going back a long time, man. This is insane. Yeah, I like this. Wow. Unreal. Yeah, as Jay says,
the scanner will let you watch them just constantly. You know, I mean, because you can look at all 4 markets right there that they're on.
Yep. And
because if you're just watching the 20 minutes, like what happens when we come up on the top of the hour here in 4 minutes?
Yes.
We're going to the 11 o'clocks.
Right.
And so what we're going to be able to do is it's going to combine the 11 a.m. contracts with the 20-minute 11 a.m. contracts.
Yeah.
If you're just on the Nadex platform, you're hopping back and forth between 20-minute 11 a.m. binaries and intraday 11 a.m. binaries.
Yeah, and as Darrell's talking here, folks, so you get the program up, you get the exchange up, come over to our website, you can test drive his analyzer and scan it, and it's huge because it's specifically just what we're talking about here, never mind the deviation levels that are on this. Because when you get, well, you don't need the deviation levels for these 20-minute ones, but you want to use the deviation levels because when you are approaching, let's say when you're approaching one deviation, well, guess what? At that particular point, no matter what you think the market's going to do, it's going to be a lot harder to go forward in that direction, whether you're going up or going down. As we're talking out here, folks, okay, the dollar's giving it up. Okay, so this is...
What is up with the dollar? What's going on fundamentally there?
It wanted to just test this level. I mean, I don't know how these things work. No, I'm not kidding, man. I mean,
I know. And like King Dollar is like,
And it tested. Now, what I'm really digging, okay, now watch this. This is pretty sick, folks. The correlation that we had between the dollar, the S&Ps, and the commodities have never been as close, meaning tick for tick, in, you know, about let's see, in a good 10 years, okay? That correlation came into being really, you know, about 3.5 weeks ago. It was tick for tick. It's like, okay, man, hold it. And when that correlation happens and it's so close tick for tick, it's like, okay, the correlation's direct right now. So this morning when this was happening, I says, okay, man, I think, you know, we've tested once, we've tested twice. The S&P just continues to go higher, higher, and higher. And yesterday was really the heads up. What you had yesterday is that all the indices got over the highs. They were under them, and then at the last minute, okay, they juiced the market again, and they stayed over them. I said, okay, that totally makes sense in the context of how these tops come in. And then when the Halliburton Baker Hughes deal come out 20 minutes before the market closed, I says, oh, that's going to be good. And the reason being, I was saying that, folks, in my own head, was that's what normally happens when you're getting larger turns in the marketplace. Because you got to figure something. So watch how insane or how the foundation of Wall Street is basically corrupt. And what it is, folks, is that you can go to the top 10 of anything out here, and nothing has been said today at all about Baker Hughes, about Halliburton, in the context of the Journal releasing even that information prior to the close. And the reason being is that, you know, markets know that, hey, listen, if things can keep going up, everyone does well. You know, if that was just the opposite, let me tell you something. What ended up happening, the SEC would have been all over that, saying that there's something wrong, because that would have been a material deal. You see what I'm saying? Before the close. So this morning, when the dollar itself was testing the highs of last week, the volume was so much lighter. It's like, really, man? This is a trip, you know? Oh, this is a great question. Yeah. Hey, Darrell.
Here we go.
So the average on the 20-minute ones, how do they price it out? Meaning, you know, is it the average of the last 50 trades? How do they price that out? Do you know?
How do they price out what?
How do they price out what the close is? Okay, so picture, we just closed up.
It's on every single contract on Nadex. The settlement price is always evaluated as the last 25 trades on futures, okay?
Okay.
So it didn't matter if there's 100 contracts on a trade or 1 contract on a trade.
Okay.
Okay? So on time and sell stamped, the last 25 trades, they drop the top 5
Yeah.
and the bottom 5 prices.
Okay.
Okay? So that way they don't get spurious quotes where somebody's manipulating the settlement. And they average the middle 15.
Yeah, that's
great.
great.
25 trades happens in like a millisecond.
No, that's great to know. No, it was a great question, Jay. And no, it's huge to know because, I told you.
Well, that matters so much on how binaries work. And people get upset sometimes if they're like, what are you talking about that was out of the money? And they get all pissed off, right? And it's like, well, it was out of the money. I mean, it's the last 25. So, and I mean, you can even I've even petitioned before. I'm like, what? Now, I mean, I even have a router's feed and everything, which is a Reuters feed. Which is what they use, and I built in the live thing to see settlement. I mean, they're spot on. But before I had that set up, and they'll actually send you a shot out of like Bloomberg, and showing you like the last 25 trades and the average price. So, I disputed before because I'm like, I'm not sure that was out of the money. And they're like, yep. And, I mean, that's also where I've come up with a rule why I don't like to wait. I close. Because, I mean, these are close. I mean, we're only talking a couple points.
You know what's so wild is that, on these ones here, there's no reason to hold because where I like going, folks, okay, I don't like being out of the money, okay, on a regular option. But I don't have no problem going out of the money 1.5 or 2 points on an S&P with 7 to 8 minutes left because you're either right or wrong. And what the difference is, what, $4 for 50 or $4 for 80 or $16 for 80? It's like, no, I'll take that, man, because I can be wrong 3 times in a row. And I'm only being wrong at $18. It's like, oh, really? That's sick. Yeah.
No, I mean, yeah, literally, like you don't have to, you could, well, I mean, I think that's one of the biggest things actually right there that you're getting into. And this is something that trader psychology has to grasp.
Right.
Is the fact that when you go in and you're trading something like this, and you're trading, especially if you're going on the low-risk contracts,
right.
Okay, you really have to be, if you want to do those out-of-the-money contracts, they're lower probability, right?
Right.
I mean, they have to move. So you are going to take on more losses in that process. But your payout is so much higher that your probability can go lower when your profitability goes higher.
You're right. And you need a methodology behind it, you know what I mean? And, what does happen is that if you're trading off those swing points and trading off the volume, in these future contracts, I've done it for a long time, man, and guess what? For a 2 or 3 point move, what happens, folks, is that you can actually be wrong on the larger move, but on the smaller moves at those swing points, most of the time you're going to see a failure back down, then it'll go after it again. If it's successful, it'll go up and then pull back again. So when you're talking 2 or 3 points in an S&P, that's nothing, man. That's insane.
Well, check this out right here, too, what we got going on right now.
Yeah.
Remember I talked about it, we'll have the 11 a.m.s lighting up at the same time?
Yeah, let me pull them up 1 second. And it's pretty cool, folks. They all go, let's see, they all go black, red X. Okay, so go ahead.
And next week we'll have it auto-refreshing. Right now you got to force those 20-minute binaries in there. We'll have it auto-refreshing next week.
Okay.
But so anyways, I refreshed it. I opened it up there, and now we got the 20 minutes, and we have the 2-hour ones, the ones that started at 9, both expiring at 11.
Yeah.
Okay? So using the scanner, I can actually go through, and these are all these contracts right here.
Okay.
Now I can see every contract that expires 4:11 a.m.
Right.
In one place versus going 2 different places. They're all sorted by, strike, high to low.
Yep.
And see, I mean, some of these are really close. I mean, you're like, 0.2, probably 0.25, 0.6.
I know, man.
So they're super close, but I get to see all of them right there. I mean, that one's only like, a tick off.
Right.
So not even a whole tick on the on an S&P, just not even a whole tick, 0.1, 0.25. So, anyways, but you can put all of them in one spot. And then imagine, okay, today, when we get to 4 o'clock,
right.
You go in, you're going to get the dailies as well lining up with the intradays, with the,
I like how this works.
Contracts.
If you're in the car, folks, okay, Darrell's putting his mouse over the contracts, and it basically it lines up. This contract expires during the day. Yeah, this is really cool, man. Look at this. Okay. So
you can go there, and it tells you if it's in the, intraday and all that fun stuff. Right. The beautiful thing is putting them, what I like is instead of going to 2 different places to click, they're all in one spot. They're all sorted. Because I don't care if they label the thing 20-minute binary or intraday binary, right?
Yeah.
I just care that both of them expire at 11 a.m. So I want to see them all in one spot.
Right.
It makes me it helps me find the best contract. So, and sometimes, I mean, you can find, we've seen this. I don't see any lining up right now, but every once in a while, we pulled up contracts before. We've actually found better deals on like closer contracts for out of the money, or better deals on further out contracts for in the money.
Yeah, no,
just by winding them all up.
No, that's the name of the game. And that's, you know, folks, when the pro shares first come out, that's what ends up happening. At the beginning, that's when the bigger opportunities are there. That's what it comes down to. Do you know what I mean? Because they'll get that straightened out. But, you know, that happens because the market makers themselves, they're just getting used to it too. Do you know what I'm saying? I mean, that's the reality. Do you know what I mean? Look at this thing.
Exactly.
Yeah. Amazing. And needless to say, folks, well, not needless to say, gold, silver, going to the moon, dollars going to hell in a handbag. Oh, baby. What a trip this is. So the gold contract, folks, they're going to catch everyone on the wrong side. They've already caught them on the wrong side, but this is going to be pretty intense. We've had there's already been a 30-point price spread in gold. It's at 1176 right now. You have a Friday happening. This is early, man. This is, okay, hold it. No, check this out. This is going to be great. Okay, so 1172. Oh, this is sick. 46, 56, 66, 76, 72, 82, 92. Man, this is actually going to the moon. This is going to be a trip watching this thing strike out, man. Yep, this is what it takes, so. You know, and it's tested a million times. That's the real bottom line. You have the equities. The equities got a little more juice here. But I mean,
we got 1238 right now is $18. You know, if you see the equities popping up at all.
Yep.
So we're just gonna go back down. I mean, 1230. You got 2038. You got 2034. So I mean, right now, I mean, we still got about 12 minutes.
I know.
You could pick your poison, long or short.
And those are the ones. See that you know what? That's. I think that's gonna maybe be that sweet spot there. You know, because that's a. Well, let's put it this way. That would be a 1 for 5. But really, folks, the way you want to think about it is think about it that you want to bail out of these at like 60 to 70. That's the way, right? 18 to, you know what I mean?
At least, yeah. Because I mean, you got to hop out of that trade.
You do.
I mean, this is about where it expires, not where it goes.
Where it goes too. See, so watch. You're at 37. And
we were at 18 before. Yeah,
and this thing wants to basically whack 39. It does. No, this is cool, man. This is sick. Oh.
So, and it's hit it like 3 times, like multiple times here since we've been on the show. So I mean, it's not like some just random price.
No, it's not. So, it's not. That the range we've been in now for
you're already up 50% right now if you got in when I called it.
Yeah. No, I can see it, man.
Now you're almost up 100%.
Hey, this might make me a bull intraday quite a bit. How about that, huh?
Yeah. I think this can end up being a very large. I think 14% was just a start, and they get these things expanded out on the commodities and on the FX pairs. Watch out.
Oh yeah, this is it, man. I agree, man. There's because you actually really have a shot at basically doing very well with a small amount of money. That's the reality, man. I mean, why would you put up 50 to make 50? That doesn't make any sense.
Yep. Go in and make a basically same return on a smaller amount.
Yeah. You stay right there, folks. Darrell Martin, Tom O'Brien. Appreciate you growling a problem with us out here. Right now, you got the Dow, NASDAQ, S&Ps. They're all flat. Gold's up 13. Silver's up 23. King Dollar is up 153 ticks. It was up over 550. King Dollar's dead for a while, folks. Coming right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling a problem with us out here. And, folks, if you haven't tested this Nadex platform yet, guess what? You can test it for nothing, folks, okay? Go out and test it, okay? That's the bottom line. The way you do it, just go to TFNN. You take TFNN. You'll pull the platform up. They'll put $25,000 of paper money into your account. Once you get that, you can come over, test drive Darrell's analyzer, and, you know, depending on what type of trading you do, folks, these binaries, okay, you know, I've been trading spreads, and I like spreads, and they're singles, and that's it, because the binaries, the longer binaries, realistically, are, the risk versus the reward doesn't seem to get into play. These closer binaries are unbelievable. And the reason they're so unbelievable, especially if you've been trading futures or you're trading swing points, is the fact that, you're only looking for a movement of 1 to 2 points. Well, let's say 1.5 points. In the context of 5 or 7 minutes, which you can get, and guess what? That's where the bread is. It's crazy, man. It's amazing, And there's no doubt that, you want to be doing this if you're a technical trader. That's the bottom line, So you don't want to think fundamentals.
Exactly. Yeah. I mean, you're not. It's funny. I was reading an article on, I want to say it's CBS or NBC, one of those. It's about the 20-minute binaries, and some guy that he runs a fund and trades options. Like, I can't think of these don't follow the fundamentals at all. I can't think of a single reason why I trade them. I'm like, you're not trading fundamentals when you're trading for 5 minutes, buddy. You're trading charts.
Exactly.
I mean, you're aware of government news, but beyond that, you're trading the charts.
No, you are.
I mean, that's obviously coming from somebody who's doing a very longer-term mindset of trading that doesn't mind sitting in a position for 3 weeks, 3 months, 3 years.
Right.
And I want to get in, get out, take some cash, and cash it out and go use it.
No, that's right. And that's their style, and that's fine if that's what it is.
Right.
In this case here, what you do have, if you're a technical trader and you're trading off, some people call them pivots, swings, whatever you're trading off of, whatever that methodology is, you're going to be surprised that you can put that methodology to use. And I suspect, folks, and this is what I've learned years ago, is that you can put that methodology to use almost no matter what type of methodology you have, as long as you use money management, because that's the kind of deal with, because it's such a short term, that's what you're dealing with. It's going to be more about money management and the methodology behind it, because if you're going for, whether it's $4 for 50 or 18 for 60, those numbers, they seem outrageous, but they're not in the context of how markets move, folks, okay, because you're only out looking for 1.5 points. And that, by the way, this is 1.5 points either way. It doesn't matter. That's what's so crazy. You can be a bull or a bear. That I think one of the keys are, and that's what really is understanding that don't go for the 50 contracts, meaning 50 to make 50. Okay, the bottom. What, and this is where you will probably pick this up. What very well may happen at those points, though, is that you're going to be selling them. The other side and collecting the premium. Because I suspect that's just as heavy. It might be even heavier than we're talking about right now.
If you're going to risk 50 to make 50, go in and buy a couple $20 ones, right? Risk 40,
right?
Sell them out at $40 each, okay?
Right.
You make 40. Buy 25. Like, that's the idea: is get in and get out.
Yeah.
Don't wait till expiration. That's the biggest no-no on these contracts that people make all the time.
It is.
Get out of them.
Okay. Hey, listen, man. Thank you so much, Darrell. Really appreciate it. We look forward to your program at 1. You stay right there, folks. Get a lot of great programming coming up next. And of course, we'll be back with you this afternoon. The Dow is flat. Nasdaq's up 4. S&P's down $1.50. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.